Hello friends, I am CA Rashmeet Kaur and today I am with my team is going to cover the topic that is equalization levy. We have with us Mr. Malik Anand, who is a chartered accountant and having experience of 28 years in practice, CA Pradeep Sajwan and CA Deepak Mittal on this forum. Mr. Girish Malik will explain in simple words the provision related to Section 165, Section 165A, and Section 194O of the Income Tax Act, which is basically related to the tax of resident and non-resident e-commerce operators in India. I request Mr. Girish Malik to start on this. Yeah, sir, as you can explain section 165 first, and you can tell us that how government starts this equalization levy in India and from which particular year it is implemented.
Hi guys, I'll take you to the brief legislative history regarding the levy of equalization levy. Basically, all the tax laws, whether direct or indirect, they were enacted on the basis of brick and mortar economy. However, thereafter, the businesses, they started happening in the clouds, which means that, with lot of online transactions starting, the concept of territorial jurisdiction was totally lost. As a result, since the territorial jurisdictions could not be defined, so the residents started bearing all the taxes, and non-resident e-commerce operators who did not have permanent establishments in India, they also were not paying any kind of taxes on that, and most of them took their registrations in tax-free havens. Thereby, they were not even paying taxes in their country of origin, and obviously they were not paying taxes in India. In order to try to cover this disparity between the taxes and to augment the tax resources, the government of India came out with the idea of equalization levy. And this is basically a direct tax which has to be borne by the various people, as we will explain going forward in this video and in this presentation. So basically, the concept of equalization levy, it started in India when Finance Act 2016 introduced Section 165. It enacted Section 165, which was applicable from 1st of June 2016. As per this section, all the residents who were availing advertisement services, the online advertisement services and online sales promotion services from non-residents, they were required to withhold 6% education levy, and they had to deposit this education levy to the credit of central government. Basically, this section was applicable to all residents. However, the threshold limit for applicability of this section was 1 lakh rupees, and in case any resident Indian pays more than 1 lakh rupees to a person resident outside India in respect of online advertisement or online sales promotions, he is required to withhold 6% equalization levy, and he has to deposit the same to the credit of the central government. It is pertinent to note that 6% equalization levy is not applicable in case of personal expenses. It is applicable only in cases where a person has claimed the expenditure on this advertisement being paid to non-residents in his profit and loss account, and then only he has to deduct equalization levy. I'll give you a small example. Suppose Mr. Deepak pays 2 lakh rupees to Facebook to find a suitable life partner for himself. He intends to get married. Since this is his personal expenditure, 6% education levy under section 165 will not be applicable in this case. And basically, he doesn't need to deposit any equalization levy. So this was the first step, wherein the government introduced equalization levy to augment the financial resources. Any questions?
Yes, sir. So the income on which equalization levy has been paid under section 165, then the non-resident will not be required to pay income tax on that income again.
No, in my opinion, there is a section 1050, FIFTY 50 in the Income Tax Act, which says that any income on which, equalization levy has been paid under section 165 shall not be chargeable to tax. It shall be exempt from tax. So in my opinion, there will be no income tax on the income on which equalization levy has been withheld and paid to the credit of the government. Any further questions?
As you explained in section 165, it is applicable on an online advertisement service. Are there any other services under Income Tax Act or Finance Act on which equalization levy is applicable?
Yes, Pradeep. Basically, this was just the beginning of this particular section in 2016. Government thought about this a bit further, and as per Finance Act 2020, they introduced another section, which is section 165A. As per this section, equalization levy has to be paid by an e-commerce operator who is not a resident of India and who does not have a permanent establishment in India at the rate of 2%. So I will just, read verbatim this particular section for the benefit of all our viewers. The Indian government further expanded the scope of EL in the Finance Act 2020 to include a levy of 2% effective from 1st April 2020 on the consideration received receivable by an e-commerce operator on the following transactions. I'll just enumerate the transactions. Goods sold by e-commerce operators through online medium, or provision of services provided by the e-commerce through online medium, or goods and services sold by e-commerce operators through online medium facilitated by the e-commerce operator, or any combination of the above mentioned activities. This levy is applicable on above kind of transactions, and the threshold limit up to which this amount has not to be paid by an e-commerce operator who is a non-resident and who is not having any permanent establishment in India is 2 crores. Any more questions on this?
Yes, sir, I have one doubt.
Yes,
As you said that for section 165A, turnover limit is rupees 2 crore. So this 2 crore limit will cover the turnover in India or total turnover, sir?
Yeah. First of all, in order to answer this question, I will tell you briefly on what kind of transactions it is applicable to transactions between residents and non-residents. So here also I'll read through verbatim the concept given. The levy is applicable on consideration received by the e-commerce operator on the above transactions. These transactions are the transactions which I have already explained from a person resident in India. So any e-commerce operator, in case he is undertaking the transactions of sale or purchase of goods and all those things which I have already explained above. So all those transactions, wherein the service recipient is a resident, they are covered under this particular section, and the 2 crore limit, in case you have to calculate that limit, you have to include those transactions. Now we discuss about the transactions where the service recipient is a non-resident. In case of non-resident, where the sale of advertising to Indian resident customer or a customer who accesses the advertising through an IP address located in India, sale of data collected from Indian resident or from a person who uses an IP address located in India. Person who buys goods or services or both uses an IP address located in India. Thus, the levy captures online sale of any goods or provision of any services by or through non-resident e-commerce operator. So the punchline over here, the main point over here is, in case the service recipient is a non-resident, then how they track these transactions? These transactions are tracked through the IP address, and that address has to be located in India. So I'll explain it further. In case total turnover of an e-commerce operator from all his transactions throughout the world is 10 crores, and out of these transactions, he or it or whatever, the e-commerce operator has transactions of 2 crore 10 lakhs with the persons resident in India or non-residents who are effecting these kind of transactions through an IP address located in India. Those 2 crore 10,000 10 lakh worth of transactions will be captured, and that will be the turnover of the e-commerce operator on which he has to pay education levy at the equalization levy at the rate of 2%. Any further questions?
Sir, no, I don't have a question, but I want to add one point as explained by you. Equalization provision are applicable to e-commerce operator if turnover is excess of 2 crore. But as per section 165A, there shall be charged an equalization levy at a rate of 2% of the amount of consideration received or receivable by e-commerce operator from e-commerce supply, which shall include consideration for sale of goods is respective of whether the e-commerce operator owns the good. However, that it shall not include consideration for sale of such good which are owned by person resident in India or a permanent establishment in India of person non-resident in India if sale of such good is effected through such permanent establishment.
Yeah, I fully agree with what you are saying, because these are all given in the act. And I would like to clarify another thing, that section 165 and section 165A is not a part of Income Tax Act. These are just enacted by the various finance acts. Though there are many provisions which are identical in Income Tax Act, which we will discuss further, and there's a lot of intermingling of provisions, but these two sections are not a part of Income Tax Act, so we should not look into the Income Tax Act in respect of in case we have to find something in relation to these sections. Any further questions?
Yes, sir. As explained by you, it means if someone pays rupees 1,50,000 to Facebook India for online advertisement, would it be subject to equalization levy under section 165?
No, Rashmi, in my opinion, since Facebook India Private Limited is an entity registered in India, and those services are rendered within India, so Facebook India will not be a non-resident who does not have a permanent establishment in India. In my opinion, on 1,50,000, which is the amount of online advertisement expenses, provisions of section 194C of Income Tax Act 1961 shall be applicable, and the rate of TDS should be 2%, which is applicable to the corporate deductees. Any further questions?
Yes, sir. I have a question regarding due date. So my question is, what are the due date of payment and filing of return for section 165 and 165A?
Yeah, the due dates in respect of payment of equalization levy are almost identical for section 165 and section 165A. The due date for deposit of equalization levy is the 7th day of the succeeding month in which the equalization levy has been deducted in case of section 165, because here the service recipient has to deduct 6% from the gross amount payable to NRI. As per section 165A, since the payment of equalization levy has to be made by the e-commerce operator who is a non-resident and who does not have a permanent establishment in India, that particular entity will have to deposit the equalization levy again within 7 days of the succeeding month. However, the exception is that the equalization levy for the month of March has to be deposited on or before 31st of March for the relevant financial year and for the month of March. The second thing is what kind of annual returns have to be filed. In respect of annual submission of figures to the department, the requisite return has to be filed. The form number is form number 1, and this return has to be filed on or before 30th of June after the close of financial year on 31st of March. So these are the due dates of filing various returns and payment of taxes with respect to equalization levy under section 165 and section 165A. Any further questions?
Yes, sir. I have a question. As you explain about due dates for payment of equalization levy and filing of equalization return, so what are the penalties for non-deduction or non-payment and non-filing of return under section 165 and
Yeah, I'll
165A?
briefly run you through the penalties, which are almost identical with those imposed under Income Tax Act also. As far as equalization levy is concerned, under section 165, a service recipient has to deduct this amount from the amounts payable to the non-residents. So in case the person fails to deduct the amount of equalization levy, he has to pay penalty up to the tune of the same amount as equalization levy was there. So in case he fails to deduct, he has to pay the tax as well as equalization levy. So that is the penalty number 1. The second one is other two penalties. They are almost, I'll say, fully identical for both section 165 and section 165A. In case you do not deposit the equalization levy on or before 7th day of succeeding month or by 31st of March, as the case may be, under section 165A, this is a penalty of 1,000 rupees per day for the delay in deposit of equalization levy. However, the amount of penalty cannot exceed the amount of equalization levy. So it's capped at that limit, as it's done even in case of section 234E in Income Tax Act. So this is one. And in case you have to file your annual statement in form number 1 on or before 30th June after the end of financial year, and you do not do it within the stipulated time period, there is a penalty of 100 rupees per day for delay in filing of annual statement in form number 1. So these are the penalties. I'll add something to it, in case a person who has debited an amount of online advertisement payment of 2 lakh rupees to the profit and loss account. Here we are discussing only section 165 because the concept of deduction is there in section 165 only. In section 165A, the amount has to be deposited on the amount of turnover. So in case a person has not deducted the equalization levy on say 2 lakh payment to the Facebook US, then that 12,000 which he has not deposited by way of equalization levy shall result into disallowance of this entire 2 lakh of expenditure under section 40A IB of Income Tax Act 1961. So it calls for 100% disallowance of such expense. And I would like to add something further over here. In case the assessee, your client, is subject to tax audit, and in section 40A IB, there is no particular clause, in my opinion, to report non-deduction of equalization levy or to add back that amount, to report in the tax audit report. So what I will recommend is that while preparing the income tax returns of all such entities who have, not deducted or failed to deposit the equalization levy under section 165, please add back these amounts to the computation of income to arrive at the income chargeable under the head business or profession. In case you fail to do so, either advertently or inadvertently, the assessing officer is going to disallow this particular expense under section 40A IB of Income Tax Act. And once it gets disallowed, you are not just liable for payment of tax on such amounts, but also interest and even penalty under section 270A of Income Tax Act 1961. So these are the various, penalties for the defaults, in my opinion, for, not complying with the provisions. Any further questions?
Yes, sir. I have a question. So you have explained for non-resident. So what are the provisions which are applicable to resident e-commerce operators in India?
Yeah, basically 165 and 165A pertaining to equalization levy always involve, non-resident e-commerce operators or entities providing online advertisement or sales promotion services, which are located outside India and who do not have a presence in India in terms of, they don't have any permanent establishments in India. Finance Act 2020 introduced another section, which is section 194O of Income Tax Act. This is the section of Income Tax Act. Mind it, section 165 and 165A were just enacted by the Finance Acts. They are not a part of income tax. So as per the newly introduced section 194O, which is applicable from 1st of October 2000, the e-commerce operator who is a resident of India has to deduct TDS at the rate of 1% on the various transactions of sale purchase, affected by the various e-commerce participants on their portals. So it is mandatory to deduct the TDS under section 194O when in case of individual and HUF, the amount of turnover by each e-commerce participants during the year exceeds 5 lakh rupees, and in case of assesses other than individual and HUF, there is no such limit. So even on 1 rupee turnover, you have to deduct 1% TDS under section 194O of the Income Tax Act 1961. Now, in case we really look into the provisions pertaining to the e-commerce participants, the turnover of an e-commerce participant in India has to be verified from 3 sources. Source number 1 is, the turnover on which the e-commerce service provider has deducted TDS at the rate of 1%. The second source, which everybody knows, is that under the provisions of GST, the e-commerce operator located in India has to, charge TCS at the rate of 1% on the entire turnover of the e-commerce participant. And mind it, there is no threshold limit for collecting of TCS by the e-commerce operator, in whether it's an individual, HUF or whatever. So even if 1 rupee of turnover, 1% TCS, has to be collected. So in case you are finalizing the income tax return or the, GST return of e-commerce participant, so basically what you have to reconcile is the figures of turnover appearing as per section 194O and as per TCS provisions of GST Act. Ideally, these turnovers should match, but I'll also give you an instance where there can be a mismatch in this turnover. Suppose Mr. X, who is an individual, or an HUF, I'll say X, who is an individual, he has total turnover of 10 lakhs during the financial year. Suppose he is an e-commerce participant on two portals. One is Amazon and other is Flipkart. Suppose his turnover on Amazon, it is 6 lakh rupees, on which Amazon deducts 1% TDS under section 194O, and on Flipkart the turnover is only 4 lakhs, which is below the threshold limit of 5 lakhs, and Flipkart does not deduct any TDS on this. So basically, the turnover as per 194O shall be rupees 10 lakhs, and obviously no, as per 94O shall be 6 lakhs only. However, as per TCS provisions of GST, the turnover is going to be 10 lakhs. So there's a difference of 4 lakhs in this turnover, and this difference should be sorted out in the beginning, and a proper reconciliation should be prepared in respect of this kind of differences. Now, the third source from where you can verify the turnover of an e-commerce participant is the figure of turnover reported in GSTR 3B of the e-commerce participant on the month-on-month basis. So here, ideally all these three turnovers should match, but basis my experience, I would like to figure out one particular example, wherein these figures will not match with GSTR 3B. I'll give you an example of a cafe located in, say, Vikaspuri, New Delhi. This cafe is supplying, food products and beverages online through an e-commerce portal, say Swiggy. So suppose that he is, supplying through Swiggy and making some offline transactions also, in the sense that, there's a seating arrangement in the cafe, and, customers come there and they serve food and beverages. So ideally, the turnover as per GSTR 3B shall be turnover from, online services of Swiggy portal, on which TCS at the rate of 1% has been charged, and the turnover pertaining to the food served to the customers, that will also form a part of turnover which will be reported under GSTR 3B of this client, of this e-commerce participant. So I have given you this instance, and obviously the turnover in this case, which is reported under GSTR 3B, shall not match either with the turnover under TCS provisions of GST or with the turnover reported under section 194O of Income Tax Act by the Swiggy. So there can be various kinds of mismatches between the figures from these three sources in respect of e-commerce participants. But ideally, all professionals should try to match these figures. In case they reconcile, well and good. In case there is a mismatch, we should properly record the reasons due to which there is a mismatch in these figures, because such reconciliations, such figuring out of the discrepancies in these figures will be really helpful in case, God forbidden, you receive any kind of notice either from the GST department or from the income tax department in case of mismatches of these figures, because everybody knows that the data of GSTR 3B is also appearing under 26 AS, which is downloaded from the income tax portal after login of the client itself. So I strongly believe that before finalizing the income tax returns and the GST returns, annual returns of various e-commerce participants, these three figures should be ideally matched or reconciled in order to, prevent any further problems in case notices are received. We should not be caught stranded. So this is all the discussion, pertaining to the equalization levy and under section 194O of the Income Tax Act 1961. Hope you guys found this information useful. Thanks for your patient hearing. Have a nice time. Goodbye, guys. Goodbye, everybody. Bye.
Thanks a lot, sir.
Sir, thank you, sir.